So guys, thank you for joining me. First things first, normally with these panels you ask the startups to talk about what is it that they do and who you are, but I think with all of your propositions we're a bit past that point. So my first question to all of you would be just to tell us a bit more about what are your, in your respective roles and for your respective companies, what are your strategic priorities at the moment? What are you working on? What are you most excited about? We'll start from this way with you, Andrew.
Thank you very much. We are looking at financial resilience for working people in the UK, and this means ensuring that they have access to finance, to credit at a reasonable cost, and that they're financially included. They can get fairly priced products with ease and convenience. And we're also keen to see an upstep in financial education and financial awareness for employees and our business as it moves forward through a variety of employee portals, working with private and public sector businesses, is really making this an agenda point with government, with employers and with employees. So it's a real challenge, as we know, in the current economic circumstances too for Neighbour.
Remittances is making sending money as simple as sending an instant message. We send remittances from more than 50 countries, and we send remittances to 142 countries. And in the send side, we're 100% cashless. In the receive side, we're also increasingly making remittances digital, so cash pickup only accounts 1/3 of our transactions. Currently, we're focusing on further expanding our services. We've recently obtained almost all the money transmitter licenses in the US, individual state licenses. So US is our fastest growing market now, and we're also focused on expanding our payout network in Africa, Asia, and Latin America.
Hi everyone, thank you so much for having me. So Unbanked is a crowdfunding and support platform for companies that are tackling big societal problems. Examples include renewable energy cook stoves, ethical fashion brands, sleep devices that are patented and proven to help people get an additional 2 hours of sleep a day. So those are just examples of companies we're working with. So we vet companies quite similar to an investment firm would work. So we look for founder credibility, then we look for impact metrics. So data is very important to us. And then financial sustainability. If the company passes that criteria, we then work with them for 3 months to help them go to market. And at the moment, we maintain a 100% success rate in terms of funding companies and a 10% acceptance rate. So we're really excited about expanding our services to emerging markets because we see a lot of potential in terms of, crowdfunding can be a great tool for enabling any business owner to scale up their business and become financially independent.
And what would you say is your main differentiator with similar platforms that are on the market?
So you'll look at major crowdfunding platforms and over 60% of crowdfunding campaigns fail. And that's because of limited curation and lack of support. We believe if you have the potential to have a big impact in the world, you should have a platform to bring that idea to life. So we make sure all of our companies succeed in achieving that goal.
Shirley, thank you.
Hi everyone, I'm representing Bitpesa, and we are a Pan-African payments platform powered by public blockchain. Specifically, we use public digital tokens such as Bitcoin to significantly lower the cost of payments to and from sub-Saharan Africa. So in terms of our geographic reach, we're already in Kenya, Uganda, Tanzania, DRC, Nigeria, and Senegal. And so in terms of global expansion, we're really looking at expanding across West Africa, specifically Ghana, and Francophone West Africa, starting with Senegal and Cote d'Ivoire. So I think for us, just to emphasize that we specifically serve businesses, so they could be money transfer companies, like World Remit, where we provide wholesale FX and last mile distribution to mobile money networks and bank networks across Africa. But we also serve African businesses that need to make payments out of Africa or within Africa. And there's a growing SME client, for example, ones that are crowdfunding that would also be receiving money from abroad or paying staff and suppliers across their growing markets. So I think we're really excited about taking FX to the next level, about making a market in emerging markets where FX is a real pain, either due to the shortage of US dollars or where you're trying to make a market between two exotic currencies, whether they be Mozambican meticais or Ugandan shillings.
And perhaps to provide a benchmark for some of the companies in the room who might be looking into implementing distributed ledgers in developed markets, what's been your experience in selling a product like yours in emerging markets?
Yeah, I mean, I think being part of a new cutting edge technology can either be your greatest strength because you're kind of the new kid on the block, and blockchain happens to be quite a hot topic these days. But it can also be a liability. It's a relatively unregulated space. We still have a long way to go to develop policy and proper compliance procedures. So I think for us, when it comes to acquiring clients, we usually don't lead with blockchain first. We lead with a value proposition. And then when it comes to regulators and our banking partners, of course, we get into the weeds of blockchain settlement.
So, I mean, there's a number of topics that we can discuss on this panel. It's way too little time, but let's pick up where you stopped with your engagement with regulators, because whether it's on this market or in the emerging markets where you are, I know you all have a bit of at least war stories to share on how you've gotten to where you are. So maybe we'll start with you, Ishmael.
Yeah, I think the regulators don't always get it right. So I think for fintech players in particular, our challenge is how could we engage them and help them understand some of the new challenges, kind of identify problems and suggest solutions. And that's what we've done in a number of markets. I remember when we first started in Australia, in Canada, we were required to ask customers who do more than $1,000 to send us a photo ID, original bank statement, and a utility. And then we were required to repeat that every time they did $1,000 because the regulation was written before the internet, so they thought that it was difficult to identify the customer that is the same customer, although they're using the same email, the card we have saved, and the money might be coming from the same bank account. So after lobbying the regulator for quite a long time, that is beginning to change now. In Australia, the regulator requires us to send all the transaction details, both the sender and recipient. And when we first started in 2012, they rejected our Zimbabwe customer names because some of our Zimbabwe customers have got unusual names like Kissmore, Lovely, kind of God knows, anyone. Kind of. So for in the case of Australia, it was about kind of educating the regulator that not all the Zimbabwean names are like Robert Mugabe sort of. So ultimately, these were customers we verified, so we were able to challenge and say that these are not fictitious names, these are genuine customer names. In the case of, I think, electronic verification, where we had a lot of challenges across the different markets, I think we were able to convince some of them to accept that there are electronic ways of verifying customer identities. So in Malaysia, with the first international money transfer company that was allowed to do electronic verification under the sandbox. In Singapore, it was the same. We were one of the first companies that convinced the regulators that it is possible to do customer KYC online, so we don't have to set up a shop. So I think that has been some of our challenges.
So do you think you've now gotten to a point where your next conversation, or perhaps those coming after you, are having these conversations are easier, or is it very much a bilateral push with every jurisdiction you go to?
In Malaysia, after the 1 year, I mean, the only exemption we got under the sandbox is that we don't have to set up a shop. We can electronically verify customers. And we're able to use our experience in all those markets to show the Central Bank of Malaysia that actually it's far better to use electronic verification than ask somebody to send us a photo ID. So after a year, they would allow other fintech players to verify customers using electronic verification. There is still a long way to go in markets like Japan, who don't yet accept electronic verification, but definitely Malaysia, Singapore, and even Canada. Canada will now, in the future, allow people to send 1,000 transactions, so they don't have to repeat the process again.
Andrew, this is very much your background, at least in this country. Do you think that maybe public officials, decision makers, regulators are now getting it when it comes to properly supervising financial inclusion propositions and fintech propositions?
I think it's first and foremost a great exemplar for the UK. We've been through the whole regulatory path from interim to full permissions. We've worked closely with our regulator throughout, and we've also worked with government officials too on this inclusion agenda, an agenda which is very much output driven towards having more people financially included, access to finance being key, and financial education too. And I think that the FCA has taken a positive approach. It's known globally for being an excellent regulator, and it's actually highlighting the UK's role as an inclusive place to do business, but also for other regulators too. Our experience has been rigorous, but it's been positive, it's been robust, and we've reached a stage where I actually think that inclusion is absolutely key. And the times are really changing in the UK across the fintech business, and I think in financial services more broadly, and I hope that this is reflected broadly across the world.
Charlene, I want to change gears a little bit. The title of our panel was about how technology is actually helping financial inclusion. So 2 aspects of this from your perspective. One, how have you seen behaviors change and enabled by the Bitcoin blockchain that you use? And 2, from your COO perspective, is that robust enough? So is the technology using scalable for the purposes of your organization?
Great questions. So I'll start with the consumers, and just as a caveat, although BitPesa is focused primarily on businesses now, our roots were actually in tackling retail remittances before we realized how hard it is to acquire remittance customers. So I would say that we've found some really interesting use cases across Africa for the use of Bitcoin and cryptocurrency. So one is as a substitute for PayPal. So we actually discovered that a lot of freelancers who are providing digital services around the globe are getting paid into PayPal, but without a US bank account, they're having to go through a broker locally, and then it ends up costing like 17% before it gets into Kenyan shillings or Nigerian naira. So we found some interesting use cases, and we're very passionate about this idea of Africans being able to do business with the global world and vice versa, the entire world being able to do business with the growing African consumer market, particularly the growing middle class. So I think in some ways, actually, trading and being able to buy and sell Bitcoin in Africa, there's a lot more demand than, say, here in London. Like, I actually get paid in Bitcoin, but I don't go around, buying groceries with Bitcoin. I still use my HSBC contactless card. So I think from a consumer adoption standpoint, there's more of a need in emerging markets like the countries we work with in sub-Saharan Africa, where you don't have a credit card. I think it's something like only 3% of sub-Saharan Africans actually have a credit card. And then, of course, the banking inclusion varies from country to country. But even Kenya, where I lived for 5 years and is a fairly developed market, only 20% of people have bank accounts. But thankfully, things have come along like mobile money, which help with financial inclusion. And then to your second question about is blockchain technology robust? I would say that we should be careful not to lump all blockchain technology into the same bucket, just because we don't necessarily understand the difference between like public blockchain and private blockchain. So I think there has been valid criticism of cryptocurrencies like Bitcoin, which if you guys have been following closely, there's this big scaling debate. But I think in general, blockchain technology is incredibly robust. It may not be Bitcoin that is the lead. It could be Kanye coin or Dogecoin or Ethereum. But I definitely believe that blockchain technology is here to stay. And just an interesting quick fact is the World Economic Forum recently published a tipping point technologies report, and it stated that by 2027, so that's just 10 years from now, blockchain technology will reach a tipping point, meaning that 10% of the global GDP will be stored on blockchain technology. So whether you're using it or not as a consumer, I think the technology is absolutely here to stay and will scale in some shape or form.
Shiza, from your perspective, can you maybe tell us some of the stories, some of the financial inclusion propositions that you've managed to give life to through your platform that maybe otherwise wouldn't have had a market or wouldn't be able to reach a market?
Yeah, so I mean, in terms of this, going back to my original point, there's a number of companies that have tried alternative means of financing. So traditionally, if an entrepreneur comes up with an idea, what's been happening for the last couple of years is that they've gone to investors for investment. And then they take the idea to market and realize there's no actual revenue model in place, there's no validation in place to prove that this will succeed once it goes to market. We're seeing a huge shift in how businesses now operate. So a lot of companies are prioritizing bootstrapping over raising capital. They've realized that you do have to prove the demand before you're able to go and have a conversation with investors. And we're seeing the same happening on the investor side. Investors are encouraging companies to go out, run a crowdfunding campaign, prove the demand for the product, raise a bit of capital. If that succeeds, then you can come to us for additional capital. So we're really excited to be a part of that movement. And we're seeing a number of companies approaching us that were previously considering equity crowdfunding or they were considering investment, where we've kind of changed their kind of thought process and explained that actually market validation can only be achieved when you've actually got sales coming into the campaign. So rewards-based crowdfunding actually enables that, which is why we're quite happy to be in that space and helping these companies go to market.
Well, we only have a couple of minutes left, and I want to take some questions from the audience. But then, I mean, tell us, so you all have very aspirational journeys, and you've built aspirational companies, and we wish you the best of luck. But tell us, what's the hardest thing that you're facing right now? Tell us something difficult from the reality of building your business. We'll start with you, Andrew.
I think the hardest issue you're facing is the size of the market. It's brand resonance and its recognition, because there are a lot of voices out there doing a lot of very similar things. And I think to succeed in that, you've actually got to be really clear, particularly on the inclusion point. So I think we're in an age of activist companies now. You used to have activist investors, you've still got them. To be an activist company, which is really there for inclusion, the DNA of what you do is around inclusion, actually helps you to surpass that. But it's not easy, because there are a lot of pretenders to your throne, and you've really got to work every day to ensure your voice is heard by all of the stakeholders who are going to make things happen for you and enable your business to grow.
How about you, Ishmael? Do you feel there's a lot of pretenders for your throne?
I think the hardest thing we face, particularly in Africa, Africa is a big market for us, is the exclusivity tie-ups signed by Western Union and MoneyGrab in Africa 20, 30 years ago, when they tied up with a lot of these state-owned monopolies, banks which were state-owned, which were monopolies historically, and that resulted what the Kofi Annan, this Africa Commission panel, called the anti-competitive practices that are maintaining very high fees for particularly some of the poorest customers in Africa. And regulation is kind of influenced by the same kind of ex-state-owned banks, which are making sure that remittances do not become digitized, and who are fighting with the telcos that have launched the very successful mobile money services. So I think that is the biggest challenge. But fortunately, I think some countries have taken the lead, the likes of Kenya, most of East Africa, Tanzania, Uganda, Zimbabwe, even West Africa, Ghana now. So you have now 250 million Africans who have got mobile money accounts. So in sub-Saharan Africa now, you have mobile money accounts to bank accounts. But still, the old banks that control the networks are still fighting back. So that's really the biggest challenge. But coming back to even the earlier question, I think the biggest driver of the change now is the instant communications, because both senders and recipients have now got smartphones. And the first thing a recipient does now when they get a when they receive money is they buy those Chinese-made cheap smartphones, so that they download WhatsApp and Facebook. So they're talking to migrants regularly, sometimes daily, and that is what is really changing the behavior of senders here, sending money more frequently. Whereas before the smartphone, migrants were sending only one transaction a month. Now our regular customers are doing 3 to 4 transactions a month. In the next 10 years, we'll see them doing something like, as much as 10 transactions a month. Because now the Kenyan taxi driver, the Filipino nurse now can skip the latte and share $5, $7. And we pioneered, we introduced in Europe some of the low minimum fees, which are around €1. When we launched the minimum fees in most parts of Europe were around €10 or so. And it meant that if you only had $5 to share with your mother back home, you couldn't do it. So I think that's what we're really quite excited, but there are a lot of challenges to achieve that ultimate dream of remittances becoming fully digital.
And Shiza, what's the hardest thing your team is solving right now?
So we've worked with companies that have crowdfunded from Pakistan, India, and Ghana. And while working with those companies, we actually realized there's a lot of challenges in terms of e-commerce platforms and funneling transactions from abroad. So that's a challenge that we're trying to tackle at the moment, because most of the traditional payment gateways are only available in 25 countries, and that does not typically include emerging markets. And that's why we're going to have a conversation and see how we can expand into international markets and use the currencies that they're using on the ground.
I think with any startup, especially one that's global, one operational challenge that keeps me up at night is managing a distributed team. We've got 7 Nigerians, 3 Senegalese, 8 Kenyans, and then a bunch of us in the UK and Luxembourg, where we have an FCA payments license. So I think personally, internally, I think it's a challenge. Just things are moving really fast. We're growing 25% month over month. So just kind of keeping up with the pace of customer acquisition and the transaction volume. But I think this is a common startup challenge. I think externally, I'd say the regulatory piece, we have to spend a lot of time, energy, and human resources on making sure that we're top-notch KYC, AML, and compliant. Because the day will come when digital currency and blockchain companies are regulated. So we need to be prepared for that, and we plan fully to continue to be the first company to be licensed for digital currency transactions across Africa, and actually sit on the Central Bank of Nigeria committee, which just drafted Africa's first digital currency policy. So I think times are changing. It's very exciting, but yeah, we still have a long way to go to get to things like the level of PSD2 and beyond.
Totally fair. I think, do I have time for some audience questions? Okay. Do we have any questions here, or any microphones? Or if you say them, I can repeat them.
Sure. Hi, I'm from Telenor Digital Businesses. We're the venture capital arm of Telenor, which operates in a lot of emerging markets in Southeast Asia. I guess a relevant question for us and a lot of investors, I guess, is how localized are the solutions that you guys are seeing to solving this problem of the unbanked in your particular markets? How portable are these business models? Can they be, are the ones that are kind of winning in Africa applicable to, say, Southeast Asia, or is it really just localized solutions?
Let's give it a go. Charlie?
Yeah, well, I think we were in Nairobi in March to celebrate the 10 years of mobile money, and it was 10 years of M-Pesa. I was at the UNDP in Kenya when M-Pesa was launched in 2007, when they were trialing in 2006. There are now 277 mobile money services across the world. Of course, Africa, led, and M-Pesa was the best example, but today there are equally successful mobile money services. Tigo in Latin America, some in Pakistan, Bangladesh, and I think now with the success you see in markets like Zimbabwe, Kenya, Uganda, that is no longer something specific to one market. Today when we started, 100% of our transactions were like Western Union, MoneyGram, cash pickup. Today, 1/3, we're doing just under 700,000 transactions a month. 1/3 of those are going to mobile money accounts. So we've seen a phenomenal growth of mobile money services in a lot of markets. And I think that's only one way. Even the banks are now thinking ways of connecting the mobile number to a bank account, so that the mobile number becomes like the mobile money services, everything, your identity, your bank account, and so on. So that is, I think that trend is continuing.
Yeah, I would just quickly add, I think Ishmael points out the benefit of first mile collection and last mile distribution. It's easiest for fintech companies to scale where there's already infrastructure. So BitPesa doesn't directly have APIs to like M-Pesa or Tigo, et cetera, but we would usually use an aggregator to plug into multiple last mile distribution, and vice versa. But in terms of market capitalization, I mean, we're cloud-based. So when it comes to making payments out of Africa or within, I mean, it's cloud-based, and we're just leveraging the blockchain and Bitcoin sitting on the blockchain. So in that sense, that can be scaled anywhere.
So I was wondering how you guys were funded, and if they're basically in the funding round, there was a KPI for social impact, for example.
We're funded from a variety of sources, from our founders, from private investors, from a variety of sources. And I think one of the things, we just closed Series B a few weeks ago, and one of the key things for investors coming to us now is the social impact, the fact that we're demonstrably making a difference to people's lives, and that we have what I would call fintech development goals, which are born around societal outputs. So it's fundamental and key, and I think it's a really strong future trend that we're going to see.
Well, the rest of you, any KPI on financial inclusion in your investment round?
Last month we hit profitability, which was really exciting. So we wanted to prove to our customers that it is possible to do that, because that's what we're advocating as a platform. But we are working with impact investment firms, and we want our companies to be able to raise capital once they've done the crowdfunding campaign. And we are seeing that, you know, social impact is a very important metric that they're starting to look at. And then we're seeing a lot of traditional VCs going down the impact route as well.
BitPesa Series A, we've raised almost $6 million, but not from impact investors. And although myself and the founder of BitPesa come from a social impact world, I would argue that actually just doing business, period, in emerging markets, especially in sub-Saharan Africa, creates lots of social impact. If not explicitly, then implicitly. And for us, we're focused on the impact of solving really inefficient payments. So like the PayPal example I gave earlier, or like small businesses, they can't get enough dollars to pay their suppliers. And so a ton of businesses in Nigeria have shut down because they can't get enough US dollars. So no, we're not explicitly measured on it, but we firmly believe that we're creating social impact.
I would just like to add to my comment. A lot of companies these days say they want to change the world, but they're not using data to support it. So unless you can prove how beneficiaries, their lives are being improved on a metric level, it's not really it's not really an impactful business. So I would say data is very important.
We raised initially money from super angels who were quite excited about what we were doing. So in the first 3 years of our business, unlike a lot of fintech players, we did not raise money from VCs. And those were, super angels who just acquired common shares. So we ran the business. They let us run the business, and we were not. The metric was not just about growth for us. It was about, can we build a platform that met the tough regulatory requirements? And so it was only after, in 2014, after we've kind of achieved a level of traction that allowed us to be very selective of who we took money, that we raised our Series A, which is about $40 million from Excel. So of course, I think our investors, Silicon Valley investors, like what we're doing. We don't have explicit kind of a metrics, but definitely they are quite excited about what we are achieving in terms of increasing financial inclusion.
So I think this is coming towards the end of the time we have. One more question, last question from me, if I may. If all of you can, in just a sentence, say, what's your top ask from either a policy decision maker or industry at this point in the history of your businesses? We'll start with Charlene.
Sure. I think our ask would be, don't try to regulate the technology, like don't try to regulate the internet, don't try to regulate blockchain technology, but regulate the companies that are implementing or using blockchain technology.
I would ask for a central hub of resources that allows companies sitting in the UK to be able to work with international markets. So a pool of information that allows us to understand what regulations we need to keep in mind.
30 years ago, we had IMF and World Bank telling the developing countries how they could become like the West. I think probably now we reach a stage where some of those international agencies need to see what lessons we could learn from countries like Kenya and we could apply here. Because today, someone in Africa, including my hometown, Somaliland now, can easily make a payment without going through the broken Visa, MasterCard kind of a card schemes where you have a deferred settlement. When we started, we had a 14 days deferred settlement, disputed transactions and so on. It is just making and receiving payment is free and it's instant, and it's all done by a telco sort of. So perhaps we might need to re-engineer the way we do payments. So perhaps what can we learn from those markets?
Thank you. We've got a World Health Organization which looks after people's health. I think we can coalesce all of these international bodies into a World Wealth Organization whose remit is actually to strategically put in financial inclusion into every regulator, into every government, to think about including more people on the right side of financial services than ever before. A World Wealth Organization could start today.
That seems like an easy task to end on. Thank you all for your time.